Good morning, trading world. It is November 17, 2021, 7:52 a.m., and this is my pre-market outlook. Got a question for you. How many of you like two-sided trade? What I mean by two-sided trade is that you get a nice range where you can go long and short the same day and make money on both sides. I know I like two-sided trade, especially when it's an expansive range, a large range where you get the chance to make money on both sides. Well, we should see more of it in the next couple of days. Now that we have the weekly chart in the overbought condition, we should see other time frames go through what I like to call the treadmill effect. And the treadmill effect is just where you see the cycling over multiple time frames over the same range at a faster pace. To witness this, just pull up your favorite market strength oscillator, like your RSI, anything, any oscillator in that category. We're going to be quick today. Quick reversal levels to keep an eye on, places to watch out. On the top side is going to be your 469, 470 area. On the low side of the range today is going to be your 468 and 465 areas. Don't be surprised if it's going to be possible to overshoot on either side. So again, when we have these range days and you have two-sided trade days, you have to watch for your divergence and convergence on your indicators, whatever it is that you watch. Quickly getting to the scenarios of the day. And here we have our first scenario of the day, which is going to be a range day structure. We establish a range high of around 469, low 470 area. Then filling out for a range low somewhere around 468 and possibly pushing the boundaries lower or higher on either side. Keep in mind, like I explained before in another video, there are so many variations to a range day. I just kind of give you a general guide as far as ping pong, the main levels that we're going to ping pong between. But the thing to stick out here, which I didn't draw or take the time to draw out like I normally do, we're going to have some minor support around this 468 area, somewhere around here. So it's possible for us to get a little chop here and maybe chop back up first before going down. So keep an eye out for that. So they're going to be, you can kind of treat it like we have a range high. This could be the median and this would possibly be the low. And so your best trades are going to be from high to mid and then from low to mid. That is probably going to be the best way to treat today. But like I say, we're going to push the boundaries on either side and possibly wind up right back where we started today, pretty much unchanged. I could really see that happening today. And for or day or two where we pretty much make a large move but close the day relatively unchanged. So that is the first scenario, which I give a 35% probability. And if you notice, the last 2 days, probabilities are very hard. It's very hard to differentiate between the day structures right now. And that's because we're closing in areas that do not give a statistical advantage one way or another. So, in fact, what I should be doing, we shouldn't even look at the probabilities right now, because it's almost an equal chance for all of these scenarios to happen because of where we're closing at in the range. There is absolutely no statistical advantage from the closing data points to give me edge on which scenario is more likely to happen. So be on guard for all of the scenarios. All right, let's get to scenario number 2. Change day or rounded reversal is the second scenario of the day, which means we pretty much take off, not looking back from the 469 area where we open, taking off like a rocket lower. And we're going to go until we hit that midday chop area somewhere around 466 to 465. The important part of identifying the change day or rounded reversal is that when we get to this midday chop area, you should see divergence. You should see divergence not only here in the midday chop area, but off the open. You should see a powerful volume bar off the open, kind of like what you see here, and then pretty much from open to midday just shrinking volume, letting you know it's decreasing, like the momentum or power to that side is dwindling. And while we're chopping here, you should see divergence in your indicator at this point. So again, like I said, the 466, 465 area, don't be surprised if we overshoot the target. But coming out for the second half of the day, we should see a move back towards this 469 area, or 468, somewhere in there. But we should get that move back up, giving you great two-sided trade on the day. So that is the second scenario. And let's take a look at the third scenario. Trend day down is the last scenario. And the structure for a trend day is yesterday's close plays a very important role. We should come back up and find resistance either before or right around yesterday's close of 469.28. We're probably going to see some sideways chop around that area before making a reversal and heading down toward the 468 area. 468 area might be a place where we either stop on the way to the midday chop or where we wind up at for midday chop. But We're either going to stop at 468 or this 466 area for the midday chop. And for the midday chop, we're going to see the sideways movement and a slight pullback before resuming the morning trend. That's your trend day down for today. Not really focusing on probabilities again, like I said, where we're closing at in the range, the things that are going on, it doesn't give us a statistical edge one way or another. So again, you have to look at the key areas, play your indicators for divergence and convergence once we get to these reaction areas. That's the best way to play today's trade. Again, and as always, know your risk, and wishing you a successful trading day. Have a great one.